Welcome to week 25 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week. And your eyes are not deceiving you. I did only make $51 in week 25, which is the lowest amount I've made since the start of this challenge. So in this video, we'll unpack all of that, what happened, how we got to this position, and what I'm doing to rectify the situation. And if you are brand new, playlist is down below. Do weekly videos to give you guys updates on this challenge. So like, subscribe, hit bell notification, and let's get right into it. So week 25 was, let's just call it a challenging week. Well, the last few weeks have been quite challenging, but I've managed to trade my way out of trouble, so to speak. And I've mentioned it in previous episodes that selling covered calls below your cost basis works well if the stock is continuing to go down or going sideways, which Tesla has been doing for, I don't know how long it's been. It's probably for a couple of months or so. And I'll still be able to pull in some decent amount of income because the majority of this is coming from Tesla. But now I'm in the money on my Tesla calls, and Tesla continues to rise this week in week 26. So it's going to be a little more difficult, but I'll show you how I'm going to negate that. So we made $51. Again, didn't spend a lot of time on it. I don't have many positions to kind of manage. And I've kind of added 3% against the cumulative income in the wrong direction, where I should be on about 25.7. I'm on 22.3. You'll also notice that my available capital has gone back up, which I'll go on to because I've closed out of my other Tesla position, my strangle position, which I'll also talk about in this video. So if we have a look at my 3 calls on Tesla, so I sold the 114 and I bought them back just before the CPI announcement, just in case. I talked about it the week before. So I bought it back on the Wednesday. Yeah, on the Wednesday of week 25. Generally, I do my rolls on the Friday, but I bought it back and it was a good decision for me because Tesla went up as a result of the CPI announcement. And as you can see, on that initial trade, it cost me $1,800, but I managed to roll out the position at the same strike by another week and picked up $3,000. So in accumulation of that overall situation, I still managed to net in, that's the wrong one there. I still managed to net in $435 in premium, which is a lot less than what I usually get. If we look at here, 801, 972, so 435 is probably the lowest I've had since I've started. If I do this one, I also made 1240. So that's what's caused a large amount of the issue, and I've had to give back most of that $435 through Meta, which we'll go on to. But if we have a quick look at the chart, you can see here that Tesla has been on this rampage. It is coming up to its January monthly pivot, which I think in my media out potentially do something like this. If I had to guess, it's coming up to its overbought situation. Still got some room to go to the upside, and it's also got earnings coming up. I think it's on a couple of weeks or whenever earnings is. Let's have a look at when earnings is due. Earnings is due next week as well. So I've got to look at this all in those situations and kind of manage these positions or manage these expectations accordingly. So I decided to do it at the same strike. I didn't want to give away more premium than I had to, and because I thought it would kind of, go flat here. And the main reason for this kind of up jump is that Tesla has been seeing a vast increase in demand from the price cuts that Tesla have been doing. So that's the reason for its 7.43% move yesterday. And yeah, it caused me a bit of problem, right? As we've gone through, and these things happen, and let's see how I'm going to trade my way out of trouble. I do have a plan that I did talk about in last week's video. I just didn't execute it in week 25, so last week, because of the low volatility, which I'll talk about shortly. So we have a look at Meta. Meta, again, as we've talked about now for a number of weeks, has been on a massive rampage, massive rampage, and this continues to go higher. Was nearly at my cost basis. So if I just did nothing, I would have probably had some pretty decent premium from Meta. But We can see now Meta is getting to overbought territories. It's hit its weekly pivots pretty comfortably. We do have this daily and January pivot. So this is my lifeline at the moment. It has to somehow come back to here on this, but I can't wait much longer on this 97 call I had. So what I decided to do was roll up by about a month in duration by $3. So that would have cost me $300 in a debit. I managed to get $10 of extrinsic value, which therefore cost me $290 to make a $3 or $300 roll. So I'm quite happy with that move. Again, I've moved up my strikes by a little bit. So it's not ideal, but you can see here, look at the volatility. Look at the volatility on Meta. There's nothing there to kind of drive the stock. And generally what happens when price goes up, volatility contracts pretty heavily, which is what you can kind of see there. So that's the situation with Meta. Again, I've managed to go up slightly, but I'm in trouble here. I am in trouble. And again, if this was a portfolio, I would be looking to kind of exit these positions or do more of an aggressive roll up to the 105, 110 mark and, start giving back some of my gains to, get out of this position. But because I'm using it for income, I can't really do that for this particular example. And then lastly, I then also bought back my Tesla Strangle. I bought it back for a total of 94. So that 290 debit and the 100 odd debit for $384 is what wiped out a lot of that 400 gains from Tesla. So that $400 of 450 premium or whatever it was has paid for these debits. But overall on this trade, I have made $1,000. So of the $1,000, it wasn't 1,000, was it? It's the wrong way. So on the initial trade, I sold this for 900 debits, and if I add the premium plus that inside there, so the maximum value I could have got out of this Strangle was 1,096, and then I took 1,002. So I gave back whatever it was, the 90 odd dollars, $94 I gave back of the full premium that was available, which was a lot more than what I anticipated to do. I thought I was going to give back about $500. So I extracted 90% of the potential opportunity for that Strangle, which is great. So it's a lot more than what I expected to go in. And what I said in last week's video was I was going to go put a new Strangle on. The reason why I didn't was two reasons. One, we've got earnings next week. And two, if I go to a daily chart, this will show it. So I've got the right volatility. The implied volatility is nowhere where I need it to be. And what I'm waiting for is for earnings. So every time you see where Tesla has earnings, there's an increase in volatility, except on this time here, Tesla was going up. My concern here is this time round, that volatility will not be at its peak when price is going up. We should see an increase. So if we get anywhere in this kind of green section here between 50 to 80, that's the kind of area I want to sell this Strangle. So that's why I didn't sell it, because if I sold a Strangle and picked up premium, and as earnings come through, volatility increases, therefore my options are going to increase in price. As a premium seller, I want my options to decrease in value. So this is a waiting game. Now, I have to mix that up with potential of, trying to make money. What I might do, it's next Wednesday earnings. I should have done something. I should have done something to pick up some money. But what I've probably got to do now is I have to manage these covered calls that I've got on here. I don't really know what to do, if I'm really honest, but that's what I need to think about this week. And that's what's part of my 40 hours or hours time spent on deciding what to do with this particular trade. But what I would like to do is roll out the 114. I would like to roll it up if I can. I might roll it at the same strike, because if Tesla was to go down then we do have some leeway then to the downside to roll this. Meta, there's nothing really to do until February 24th, unless Meta has a massive sell-off, which will allow me to roll this up further. And I want to put on another strangle position. If it's not going to be on Apple, I'm in Tesla, it might be on Apple. But you can see here, everything has low volatility. If I look at something even like Coinbase, for example, we're at the lowest parts here. There's not much really for me to do. I'm really honest with you. There's not much for me to do at this stage, but I'm managing my current position, and I've got 12 grand of capital to be able to use to generate more premium on the side. So I really hope you found this useful. Again, it's my lowest week in terms of money collected, but hopefully I can crawl that back as volatility starts to pick up through earnings as well. I might do a few earnings trades on different stocks. I've got to expand this out. I have to generate money week on week. So I'll leave you guys to it there. Watch the playlist, which is on the screen now, and I should see you guys in the next video.